Everybody, welcome back to Cigars and Syndications, where we're passionate about cigars and we're passionate about real estate. Today we're going to smoke the Plasencia Alma Fuerte, and it is actually, I've had it before. It's one of my favorite smokes. It's a really strong, spicy smoke. How are you enjoying it so far, Jay?
Hey everybody, welcome. My name is Junaid Noor. Welcome to Cigars and Syndications. I've this is probably the first Plasencia I ever smoked, and we did a previous episode on the Sixto. This is the Alma Fuerte, and I had forgotten how good of a cigar this is. It's a spicy cigar. Starts off very spicy. Starts off nice and strong. Um, Very good smoke so far.
Yep, really enjoying it. Today on the podcast, we're going to talk about why invest in multifamily in 2023. And rewind a little bit. The last couple of years have been really positive. You've had great demand. You've got rental growth. You've got all kinds of positives in the multifamily world. And then now you hit 2023 and there's some new challenges. You've got higher interest rates. You have inflation. You have supply problems. All kinds of challenges. And we're going to talk about why it's still a good place to put your money.
Yeah, Robbie. Normally, in an inflationary environment, which is what we are in right now, and I think as of yesterday, inflation is still at just under 5%. I think I read 4.9% inflation, down from 8 and 9% from last year. But in an inflationary environment, hard assets always do well. Whether it's multifamily, whether it's houses, whether it's any other kind of real estate, except for unless there are some extenuating circumstances, like for office space, right? Office space still not doing well because of the fact that people don't want to go back to work. They don't want to go back to the office. And so the demand for office space has declined dramatically. But normally, in an inflationary environment, hard assets will do well. And one of the reasons they do well is because, for example, in multifamily, rents will go up.
So in 2022 and 2021 and the past couple of years, the rental growth has been huge and in double digits in some cases. But historically, even through some of the stagnation and some of the even decreases in rental rates, it's still above historical averages.
Yeah, it is. And one of the reasons is because there were not enough rental properties being built. New properties were not being built. We had a slowdown in the building of new houses, new construction of houses, and new multifamily was not being built as fast as it is needed. And then the other issue that you're having with multifamily is that everybody's kind of jittery about the interest rates going up. So now your new construction of multifamily is slowing down again because interest rates have gone up 8.5% for a regular loan. And then, a lot of the banks are afraid of the CMBS, which is the commercial mortgage-backed securities, going into default, mainly because if you had a property that was not performing well or it was performing mediocre at a 3% or a 2% interest rate, well, a lot of those commercial properties, unless they're government loans, the loans will reset every 5 years. So those 3% loans are not going to be 8%. Well, at 8%, if they were barely making it at 3%, they're not going to make it at 8%. So there's a lot of property that banks are afraid they're going to default on. They're going to come back on the market. They're going to wind up foreclosing on those. So the banks are being hesitant on loaning on commercial, on any kind of commercial properties right now.
Yeah. So for 2023, I think it's you still want to stay in the game. I think the asset based multifamily being asset based is still attractive, but I think for owners and investors, you just kind of have to maybe change your expectations and understand that they're not going to be the same as they've been in the past 3 years. They may be better than some of the historical data and still a safe place to put your money. You're just not going to get the same returns.
Right. You're not going to get the same returns because remember, as rental rates go up, so do all the other expenses. Payroll goes up. If you're in Houston, your insurance has gone up dramatically. Everybody I know who has got multifamily is crying about insurance costs going up. Your utilities go up, everything else goes up too, and of course rents go up, but rents don't always stay in line with all the other expenses. So rents will go up, the other expenses will go up as well, and overall, you will still make money. So rather than it sitting in your bank account, and bank accounts are not bad right now, 4% interest rates and 4.5% interest rates is not bad, but you can still get 10 to 12% returns on a multifamily property, which is much better than a 4% interest rate. Because remember, if inflation is at 8%, or even if it's at 6%, and you're getting a 4% interest rate, you're still losing 2% on inflation.
Yeah, and that's a scary thought. And for me, that hopefully that encourage you to continue to invest in multifamily. And it's a heavy asset class, and I think it's still going to outperform the historical trends, even though that it's a little bit alarming, I guess, from the standpoint of, the last couple of years have been so hot. You have inflation, you have all these negatives, but I think it's just an opportunity for GPs and investors to get more creative, look for better land deals, and they're going to be better deals because there are going to be people that are having to sell their properties. They're going to be in a loan that they need to get out of. They're going to have their interest rates are going to be climbing. And so maybe it's ready, be ready to pounce, have the capital, and there are going to be some good opportunities, even though there's some bad times.
Yeah, and a couple of other things that people should consider is that, there's all these doomsday reports that come out that I've been reading that talk about how rent growth is negative. Oh, it's negative. Austin, if you were looking at Austin, Texas, or you're looking at Phoenix, oh my God, rents declined by 5%. Yeah, rents declined by 5%. That's because they've been going up by 14% every year for the last 3 years. So a 5% decline is really not all that bad. And then when you have a market, and nationally, right now, there is a shortage of living areas, right? There's a shortage of homes. There's a shortage of apartment complexes. So when you have a shortage, rents will either stabilize or they'll still increase, but they'll increase slower. So when we do our underwriting, we always write in a 3% rental increase. Doesn't matter, if the actual market might be 14% or 15%, and we may very well get 14 and 15%. We always underwrite conservatively to about 3%. But have you ever seen, so fast forward, right? Fast forward 5 years from now, because real estate is always a long-term investment. People who invest in multifamily, it's going to be a minimum 3-year hold, right? So fast forward 3 years from now or 5 years from now, when the next interest rate reset comes and interest rates have gone back down to maybe 4%. Rents are still up. Rents have increased 3% every year. Have you ever seen rents go back down?
They don't tend to come down.
No. But utilities will come down. Actually, as of this morning, because core inflation has gone down, the price of utilities has gone down a little bit. I know gasoline has gone down. So utilities will come down. Eventually, hopefully, we have a very high insurance problem because we're all Gulf Coast states, and we've gotten hit with a lot of hurricanes. Hopefully, over the next decade, if you get less hurricanes, insurance rates will come down again, but rents are not going to come down. So what's going to happen is 5 years from now, the interest rates will come down, the expenses will come down, the rents are still high, and guess what? Your cash flow is much better than a 10 or 12%. And if you try to go sell the property, your net operating income is so much better that you're going to get a very nice chunk of change coming back as a return.
Yeah, and you had mentioned earlier about single family housing, and I think that is actually a good reason that multifamily is a good investment, because I think the shortage of housing is creating a more demand for multifamily units, and it's just kind of propping it up until we can get the single family housing problem solved. Multifamily is going to benefit from it. There's just been so many challenges facing the single family homes that it's going to be a while before they untangle their mess.
Oh, it's going to be a long time. The other problem with single family homes right now is that homeowners who are sitting on 2 and 3% 30-year fixed mortgages don't want to sell and move into a 5% mortgage. So the supply of homes is very short in Houston, and I follow the Houston housing market very closely. But the supply of homes is very short. There's still a big demand for homes, and what I'm seeing is that every time the mortgage rates fall below 7%, people go in and they rush in to buy homes, but they're just not enough on the market. And of course, the interest rates, the increase in the interest rates that the Fed has given us, affects borrowing because it's all based off of the Fed rate. And because interest rates are so much higher, developers are kind of hesitant to put out so many more homes just because it's costing more money now.
Well, and it's crazy because with all of the market conditions, you would expect the home prices to fall. But because of the shortages and because of the situation you just described with interest rates, the supply is just not there, and it is holding the prices pretty steady.
Yeah, it is, and that is the normal course of things. Is that when interest rates go up, prices fall. When interest rates fall, prices go back up. But just because there's this extenuating circumstances, this little factor of there's just not enough supply out there.
Well, if your humidor is low on cigars, I would recommend grabbing an Alma Fuerte and stocking up. It's a really good smoke. It's a strong smoke. It's definitely on the stronger side. A lot of good flavor, really spicy smoke, burns really well, and it's a larger ring gauge. It's a nice smoke.
Is this a Nicaraguan? Do you know?
Yes, it is a Nicaraguan.
Okay, yeah. No, this is a wonderful smoke, and like I said, I've had the Plasencia Alma Fuerte before. It's probably one of the first Plasencias that I ever smoked, and I haven't smoked it in a while, but this is just great. It's fantastic.
Well, in regards to 2023 and multifamily investing, I say stay positive, keep putting your money in good deals. Look for good deals because there's still good deals to be out there or that are out there, and I think there's going to be even more good deals available in the new construction as well as value add. I think there's going to be some good opportunities. So stay focused and get your capital ready and keep investing in 2023.
Yeah, and for a lot of the people who are in single-family homes, this would be a great time to sell those single-family homes because the demand is so high, the prices are so good, and go to the next level. Start getting into multifamily, either as an individual or as a group of people that can pull money together. And we did an episode on pulling money together. You can pull money together and invest in a multifamily property. Just do your due diligence. Make sure your returns are good. Make sure your GP has the experience, and make sure that they understand what the issues are and what the issues might be. For example, like we just went through, that they're underwriting 3% increases and not 15% increases every year for 5 years. They're underwriting larger increases in insurance costs. If they have a variable rate loan, which very cautious to get right now, and that variable rate's going to reset in 3 years, and their interest rate caps are going to go up in 3 years, then that's going to cost them a lot more money. Right now, they're costing a lot more money. So anyway, do your due diligence, understand what you're getting into. There's a lot of good deals out there, and this is the time to move up, go to the next level, and get into multifamily investing.
Yeah, if you have the capital, if you've invested in multifamily before, maybe just rein in your expectations a little bit. There's still some solid deals out there, and smoke up Plasencia Alma Fuerte, and have a good investing in 2023.
And, we have a lot of resources on our website, www.albanyparkcapital.com. Hit the resource tab. There's a lot of good articles on there. Follow us on social media. And, we'll link to this cigar in our YouTube channel. And have a good day and invest wisely.
We'll see you next time.